Hi, good morning, everyone. It's Sean with Paycheck the Portfolio. This morning, we're going to talk about borrowed money pays my bills. We're going to jump right into the large portfolio this morning. I'm going to do my Spark to Fire videos on the weeks I get paid. That way, I have money to deposit and invest in the starter account. So we'll pick up Spark to Fire next week. If you're new to my channel, all of my income goes into a brokerage account. I don't live out of a traditional checking account. I fully invest into equities that grow and pay dividends. And what my dividends don't cover, I use margin to float that gap, which allows me to stay fully invested on the front end instead of investing the leftovers on the back end. I'm going to break down how that works very simply here on an Excel file. But let's look at the portfolio this morning. This is my large portfolio that I show on every Saturdays, and now I'm going to show on every other Wednesday outside of Spark to Fire. My net account value is sitting at $187,805. My total unrealized gain is $43,653. Currently, the available for withdrawal is about $19,000. I want to look at the performance as of this morning on the year to date. Year to date, performance wise, the portfolio is at 2.5%. The S&P 500 is at 0.65%. The Nasdaq's down almost 3% year to date. The Dow is up 0.08, and the Russell's up almost 7%. Looking at the one-year chart as of this morning, I'm sitting at 30%. The S&P 500 is at 16. The Nasdaq's at 18.5. The Dow is at 15, and the Russell's at 23. On the two-year chart, I'm sitting at basically 61%. The S&P 500's at 37. The Nasdaq's at 44.5. The Dow's at 28, and the Russell's getting close to 34%. And on the three-year chart, I'm sitting almost at 100% time-weighted return. The S&P 500's at 75%. The Nasdaq's at 103. The Dow's at 52, and the Russell's at 42.5. If you look at my historical values over the last 1 year, while fully living out of my brokerage account, the portfolio is up $81,000. So last March, I was sitting at a net account value of $107,000. Currently, I'm sitting at $188,000. You can see over the last 2 years, it's up almost $140,000, with the beginning value there being about $48,000 up to $188,000. In full disclosure, I started to fully live out of the brokerage account right in this area here, right around May or June of 2024 for full transparency. Looking at dividends in my estimated income tab this morning, this ebbs and flows with last distribution, but in the next 1 year, I'm projected to receive about $43,000 of dividends. So this number right here does not include any trailing dividends received. It only shows you the pure growth of the portfolio. And over the next 1 year, I'm expected to bring in $43,000 of dividends. Now, what E-Trade and all of the brokerages do is they take the last distribution by fund, and then they annualize that out over 12 months. So these can be higher, they can be lower on the estimation. Typically, I'm sitting between $50,000 and $57,000 a year once it averages out over the course of the year. But every time my paycheck comes in, I'm buying more assets, which create more dividends, and that snowball just keeps working for me. I wanted to talk about something really neat. I'm going to go back to the Excel file, but then I'm going to come to this margin tab and to the balances tab so we can talk about that. There's this concept called margin maintenance. If you've ever bought a house or you've ever refinanced a house, there's a concept called loan to value ratio. Just for the sake of easy math, let's say you had a $100,000 house that was paid off and you wanted to go borrow $80,000 of your equity. You would go to the bank, you would ask for a cash out refinance. Most banks are only going to lend you 80 to 85% loan to value ratio, or $80,000 to $85,000. They don't want you to overextend yourself, and you don't want to overextend yourself. The brokerages work the same way. There's this concept called margin maintenance. Some of the positions I own are 30% margin maintenance. Some of the positions I own are 50% margin maintenance. Some are 100, and we're going to look at those specifically. But if you take $10,000, let's say you had a $10,000 paycheck, or $1,000 or $50,000, you'll see the math here in just a second. But if I invested $10,000 at a 30% margin maintenance, it would only tie up $3,000 of my equity, and I would still have $7,000 to live off of or to invest, and it would free up $7,000 of my money. If I invested into 50% margin maintenance names, it would tie up $5,000 of my equity, and I would still have $5,000 available to invest or to live off of. Now, obviously, if I invest into 100% margin maintenance names, it ties up all of that equity for dollar perspective. On this Excel file, you can type in a number here and it will show you exactly what's tied up versus what's available. So I'm just showing you this. And if you're interested, this Excel file will be in our membership Discord, and all of my resources are under pinned comments. But this will show you exactly what happens to your equity, and you can see how much is free versus how much will be tied up. I'm going to jump back into the brokerage account and show you around here. If you look at the margin maintenance tab within E-Trade, and most brokerages have this, but E-Trade has a pretty effective system, they will take your holdings and they will do this loan to value ratio calculation for you. So what do I mean by that? Here's Amazon. You can see that this is 30% margin maintenance. So again, for every dollar I invest into Amazon, they're going to hold 30 cents of my equity. Here's AMZ, which is a covered call fund by YieldMax on Amazon. You can see that's 50% margin maintenance. So every dollar I invest, they're going to tie up 50 cents of that equity, but you still have the additional equity open. If you look at Bitcoin related funds like BTCI, those are 100% margin maintenance because of the volatility with Bitcoin. Obviously, they tie up the equity dollar for dollar. What E-Trade does is they take all of my holdings, all of my gross portfolio value. This is my net portfolio value. I'll talk about that here in just a second. But they take my gross portfolio value and they say, okay, we're going to tie up $150,000 of your equity. You cannot borrow from that amount. But you have $192,000 of margin equity. Therefore, you have $42,000 of maintenance excess. This is the cash I have available at my disposal. Now, some of this $42,000 is tied up in trades, such as cash secured puts, leap year cash secured puts that tie up some of that equity. But this available for withdrawal amount is the amount that I live off of in the Spark to Fire account, the starter account for my 17-year-old daughter, and my large account that I live completely out of with all of my bills cycling through. So this morning I'll have $5,000 clear and it will be added to this amount, but that is essentially how margin maintenance works. If you go to a margin calculator right here, let's just add a 30% margin maintenance stock just so you can see it. This is SPYG. Let's say my paycheck just came in, $5,200, and I want to invest into this long-term growth ETF. What E-Trade will do is they'll show you your current state liquidity based off of all of your balances. This is a 30% margin maintenance name. If you hit calculate impact, you'll see the liquidity change right here. And notice that the available for withdrawal only went down $2,600, but I would have invested $5,200. That's the power of borrowing from your own equity in a brokerage account, especially at 30% and 50% margin maintenance names. Every time your paycheck comes in, your equity is growing. And when you invest that equity, it's not tying up your whole amount. It's only tying up the loan to value ratio set by the brokerage, and you can borrow and live off of the rest. It's a very, very, very powerful concept if you know how to manage it appropriately. Jumping into the balances tab, I wanted to show you this as well. So my paycheck came in last Friday and it will release this morning. When money goes into the brokerage account, you can see it will be held here. It pays down the margin balance or the float that I'm using currently. It in turn increases my account equity. And then I simply borrow from this equity to live off of and to reinvest. If you think about the brokerage as a house, currently my house value is worth basically $380,000. That's the gross portfolio value. If you take into account the margin, my net portfolio value is $188,000. Now there's There's actively bills being paid. So if you're seeing some variations in numbers, I just got flagged on my phone that there was an automatic withdrawal. So I fully live out of this brokerage account. It's dynamic. There's money coming in, there's money going out, there's bills being paid, there's full investments being made. So these numbers will ebb and flow with what's going on out of your brokerage account. But if you think about it like a house, it's like owning a $500,000 house and having a $250,000 mortgage. Now, most people think borrowing money to invest can be reckless, right? But I use borrowed money to cycle through my bills, and I do that on purpose. Instead of spending my money and consuming that to zero, I'm choosing to take all of my funds, fully invest into the market, and then to simply borrow from myself to create a spread, which we'll talk about next on the Excel file. So again, we talked about margin maintenance requirements and how you can leverage that in your favor. You also need to be wise with how much you're leveraging. And I'll touch on that under resources. But if you look at the business spread here, if I invest $10,000 and I'm getting 20% yields, you can pick whichever fund you would like. You can do QQQI, which pays a 14% yield. You could do QQQY, which pays a 30% yield. There's variations of vehicles out there, but I just picked a 20% yield, which is a pretty conservative blended yield. And if you want to check out all of my holdings, I have that on our membership Discord. I have about 30 holdings to create about a 20 to 25% blended yield. But if you take 20% and you look at it from a cost of borrowing, currently my margin interest rate is 5.49%. That would create a 15% spread for me. So on a $10,000 investment, basically that would generate $2,000 of annual income. And that would cost me $500 a year of borrowing expenses. Therefore, I would create $1,500 of net spread for myself. That's why I invest in the long-term growth stocks, which give me equity growth, closed-end funds, which give me drip at NAV and accelerated compounding, and high yield funds that throw off cash flow so I can generate cash on cash returns for myself. If you think about it like a bank, when you deposit $10,000 into a bank account, they don't hold that in a vault. They're taking your money and they're lending it out to somebody else, and they're creating their own spread on your money. In fact, you could probably only pull out $1,000, maybe $2,000 out of a bank. I doubt they'll even give you that these days because they don't have it handy and readily available. They've lent it out to somebody else, right? So instead of giving my money to the bank who's going to arbitrage my money to somebody else, I'm taking my own money, fully investing it into my brokerage account, and then borrowing from myself from an equity perspective and fully investing on the front end, which will set me free from a 9 to 5 job between 5 to 7 years versus 30 years. You get velocity banking out of that setup. You get margin arbitrage, which is this spread that I've created, and you're creating cash on money that you would have consumed otherwise. That's the key to the whole thing, to keep the flywheel working month over month, week over week, year over year. And as you saw in my historical values tab, my portfolio has basically doubled in less than a year. Looking at the resources tab here, I wanted to show you my landing page. All of my resources are broken up into playlists to make it easy for you. You can watch all of the videos I've ever recorded here starting back of May of 2025. And then I labeled these 1 through 6 to help you follow the process in a sequential order to make it easy for you to understand. And then the starter account, Spark the Fire, which I talked about at the beginning of the video, I'm going to do these on every paycheck cycle, which is next week. So I'll pick up Spark the Fire again next Wednesday, but you can watch all of those from the very beginning. That is for my 17-year-old daughter who just got accepted to college. She's going to live out of that starter account with the paycheck to portfolio method and accumulate assets at a young age. You can follow along if you want to learn more, and that's available to you. And as far as being fully invested, I can already hear some folks saying, well, what if the market drops? What about margin calls? What about 2008? Well, I've touched on that as well. I always have put option insurance on at all times to insure my portfolio. You can go check out my video, How I Protect My Portfolio from a Market Crash. And most recently, I have the market crash cheat code. This shows you how to buy put options and how to basically protect yourself if you're fully living out of your brokerage account. This is a view of our membership Discord. I have all of these tools and resources available to you if you want to join the private Discord and membership. My portfolio is updated here every Sunday night with all of the transactions I've made during the week. We have multiple chats, but what I wanted to call out is we have options, resources here available as well if you need to better understand insuring your portfolio and how to do that. Also, all of my resources are available under all of the comments of the videos. I have white glove setup and personal coaching. If you want shoulder to shoulder mentorship with me, you can set that up. I'll walk you through the system and we'll customize it to your specific situation. Again, you can join our private Discord and membership that has all of these resources and more. We have tools, strategy calls. We have live recordings about once every other week. Again, all of these resources, all of my YouTube video documents get uploaded here like this Excel file. You can book a one-on-one strategy call with me. That's a high-level 30-minute call if you want to know more about the system. And then you can download our free starter kit and simple calculator if you would like to see how your own finances might be impacted. I hope you found this video useful. Please like and subscribe. We'll talk to you Saturday. Hope you have a great rest of your week. Talk to you soon.